Hello, this is Phil Holoka from Complete Captive Management Services. And today we launch our next three-part series on captive regulation. Today's conversation is the captive formation process. That process is laid out in 5 steps. So when an employer considers a captive solution, where do they go from there? Well, the first step is really to have a conversation with a captive manager. That dialogue exchange between the employer and the captive manager will bring ideas to the surface on whether or not a captive solution is right for that organization. If it is right, the next step would be for that employer to engage a captive manager. Now, the duties of the captive manager for the startup process is really to facilitate and be a quarterback for all of the service providers needed to make the startup process function orderly. That startup process is generally between a $25,000 and $35,000 cost to the employer. The next step, which is a very important step, is the feasibility study. The feasibility study is conducted by an independent actuary, and it's really the predictive roadmap to the captive's future success. The feasibility study will include features such as how much premium needs to come in to cover the risks that the captive plans to insure. And then, of course, through a pro forma exercise, that pro forma will then demonstrate the profitability of the captive over the next 5 to 7 years. Now, the feasibility study is a complex step, and depending on how complex your captive is, the employer should expect it to be about a 45 to 90-day process. This step is very communication intensive between the actuary, the captive manager, and of course the employer. That cost is generally between $15,000 and $35,000. While the feasibility study is being conducted, the next step is to engage legal counsel. Legal counsel will be focused on creating the legal documents required for the captive to submit documents to the various entities requiring for the application process. Those documents are the business plan, the corporate bylaws, and of course, the captive is going to be a corporation, so there are various state and federal filings that need to be done. Once the feasibility study is done, the next step is the captive manager will go out to the various insurance markets and start building relationships. If your captive is a reinsurance captive, it will need a fronting carrier. If your captive is a direct writer, it will need a ceding carrier. The documents that define the relationship behind the scene will be drafted by your legal counsel and reviewed and edited by your insurance carrier partner. Those documents, to name a few, are the reinsurance and the retrocession agreement. Once everything is in order, the captive manager will submit application to the domicile of choice, and then that regulator will accept the application, and inherently they will have questions. The regulator's ambition is to make sure that the employer understands fully what they are investing in. Does the employer understand the captive structure? Does the employer understand what the insurance transactions mean? And so forth. So the ultimate goal here that the regulator wants to achieve is the employer needs to understand the craft of captive insurance. And together with the captive manager, they will work to exhibit that to the regulator. All in all, this is not an overnight transaction. This process takes a good 6 to 9 months, but it's a very rewarding investment to the employer. So with that, next week we'll talk about captive domiciles. Have a nice week.